Here's how I'm rebuilding my portfolio. I'm currently transitioning my portfolio, which has no particular investment style, to a dividend focused portfolio. Now, with this video, I'm going to take you through how I'm making this transition and why I chose dividend investing. Now, before we begin, I want to say that there are hundreds of different investing strategies out there. There's growth investing, value investing, which is arguably probably the most consistent, dividend investing, options trading, probably the least consistent. And now all strategies have their pros and cons. There's no ultimate strategy to investing regardless of what people say. If there was a strategy that worked every single time, everybody would be doing it and then it wouldn't be working anymore within a matter of months or even days. So I believe the key to investing is just to fully understand the underlying asset of your investing strategy. Now, in simple terms, if you're doing options, you better fully understand what calls are, what puts, call spreads, put spreads, and all that other stuff that goes with options trading. If you're doing growth investing, you got to fully understand how to value a growth stock, which is a little bit harder in my opinion compared to value or dividend investing. But aside from that, aside from understanding what you're investing in, you also want to be comfortable with the strategy that you chose. Do you have patience? Do you have time to wait for these stocks to play out the way you wanted them to play out? Are you comfortable with volatility or huge price swings? All that needs to be taken into consideration. Now, with all that being said, the strategy that I'm most comfortable with, at least for me personally, is dividend investing. The dividend stocks I feel are the easier stocks to value, and it's a little bit less volatile typically, and it's just my type of investing style. So that being said, for me, I feel very comfortable with dividend stocks and the strategy with dividend investing. Now, I'm not saying that this style generates the highest returns, but it generates returns that I'm satisfied with, and that's what counts. I think all these different styles generate a good return if you know what you're doing, and I think that's all you can ask for your investments, regardless of what strategy you're using. As long as the returns that you're making are satisfactory for your standards, you should be good to go. All right, so with all that aside, let's go ahead and take a look at my portfolio, see how we're doing, and how we're going to be making this transition. So currently right now, if you look at the 1 year, I'm up about 11%, which is not too bad, and up 21% all time. Now, that's not bad at all, at least for me, but keep in mind we have been in a pretty much a bull run this whole year. For 2018, that really wasn't the case. I think it was down like 8% on my portfolio, which is very similar to what it is now, just minus some dividend stocks. But getting into that, the portfolio does have some dividend stocks, as you can see here, but it's still far from being completed because I want to remove a couple stocks and I want to reduce the size of a few positions. And let's just quickly go over those right now. And I have them here at the bottom. And there are these three. These are the three that are going to be completely removed, which is Facebook, Tesla, and SPHD, and ETF. And we'll go over Facebook and Tesla very briefly right now. Facebook and Tesla, I believe in these two companies over the long term. However, they don't pay a dividend, so they don't play a role on the strategy that I'm trying to do. And I want to be consistent. I want to make sure that every holding meets a certain criteria, and paying a dividend is part of that criteria. So I'm going to have to let these stocks go. However, I do think Facebook is going to be one of the biggest companies in the US, probably one of the most profitable companies as well. And Tesla, for sure, they're going to be the biggest EV player, biggest electric vehicle player in the market, but that's going to take some time. So basically, these two stocks are probably going to be going sooner rather than later. I kind of want to make this transition before 2020, before next year. So we'll see how that goes. I'm up decent on Facebook. I'm currently down on Tesla, and we'll see what positions I'm up and down a little bit later. And now SPHD, this is an ETF that's a high dividend ETF that tracks high dividend stocks and pays a monthly dividend. It's pretty much checks all the boxes to be in my portfolio, but I don't want any ETFs as far as ETFs that tracks equities, because my portfolio is going to be around 30 stocks. I don't think there's any need for an ETF in this portfolio, just for the expense ratio and the fact that I'm going to be pretty much diversified throughout my whole portfolio. I don't think there's a need for that. So those are the three stocks or the three holdings that I have that are going to be completely gone. And aside from that, then it's just going to be managing the percentage of each stock. Now we can get a better look at that here. And here on the Excel, we can zoom in a little bit here. My current biggest holding is Apple, and if you see here, it's 27% of my cost. So I have around, you see here, including cash and everything, I have around $18,800 in my Robinhood account as far as just cash of my money, and 27% of that is going towards Apple. And that's just ridiculous. When I opened this position, I didn't really know too much what I was doing. I didn't really have a strategy, and I just put all my money in Apple, which I guess turned out okay. I got kind of lucky. I'm up 30% on that position for a gain of about 1,500, but I want to lower this position. Apple's still going to be part of my portfolio, but I just want it to be a much lower position, around 5%. I want every holding to be between 2 and 5%. The favorite holdings obviously being around 5%. So Apple is way too high. Facebook is going to be gone. CVS, it's way too high again. I want it to be around 3%, a little bit lower than Apple as part of my portfolio. Next we have Tesla, which is going to be gone. AT&T, I love this holding. I love the 6% yield, but 7% is a little bit high. I want to drop down to like 4%, and just going on with the list. So going towards the bottom of the list, you see all these dividend stocks here at the bottom. Those stocks are going to be staying. I'm going to actually be adding more just to finish the allocation towards each stock. And we can also take a look at that here on a different Excel sheet. And zooming in here, these are the holdings that I currently have that are going to be staying, which are right here. And then these are the holdings that I want to add. Now, if you see here, the bonds on the right, these are ETFs that track certain bonds, like the US bonds, high grade investment bonds. These are, I need to do a little bit more research on. I kind of want to learn a little bit more about bonds, but those are going to be a big portion of my portfolio. And just if anyone's wondering, that's kind of inspired from Benjamin Graham in his book, The Intelligent Investor. That he says that you want to have at least 25% in bonds. I'm going to have 15% for now, but I kind of want to look into it more. But yeah, these are the current holdings, and these are the holdings that I'm going to be adding down the line. Hopefully by the end of the year, I can get a small position in these stocks right now. Now, if you want to know how I'm valuing these stocks, or how I'm researching these stocks, I do have a video that shows how I invest in dividend stocks. I'll put a link in the description and an annotation up if you want to check it out. But that's basically the portfolio, my current portfolio, how I'm going to be transitioning it, which is buying these dividend companies, how I'm going to be selecting them and their allocations. And if you scroll here down, you can see the allocations here at the bottom. I want to have at least 2 stocks for each sector. And one quick point to mention. For these sectors, I have all 10 sectors except one. There's 11, and that 11th one is energy. I don't feel like energy is a sector that I feel comfortable investing in, so it's just been cut. Maybe down the line I could add a potential Exxon and Mobil or one of those companies in, but at least for the time being, that's not going to be part of the portfolio. These are the weights of each sector, by the way. I really do believe in tech and health. I think those are the 2 biggest industries, along with finance and industrials. And then down the line, we have at least minimum 4% in each sector. And this is based off a $20,000 portfolio. I currently only have like around 18,800 or 18,500. But once I sell some of my positions that are too big, like for example the Apple position, I'm going to realize those gains. And I'm going to have more capital to invest, and I should be easily around $20,000 invested by the time I finish out this portfolio. So that's pretty much it. That's my investing strategy, why I chose the investment strategy, and how I'm going to be transitioning my portfolio to the dividend investing strategy. So thank you so much for watching. Hope the video was helpful, and Thanks for watching.